Good morning, everyone. This is Doug Campbell with Right Way Options, and I would like to wish a very happy new year to all my friends and fellow traders. Well, it is January 2nd, 2018, and as we move forward here with this morning market preparation video, let's keep in mind that the future is not written. I know a lot of folks out there are just truly anticipating, actually almost dreading the idea that the market could just cavitate from here or really fall off a cliff. I know a lot of people are expecting that, and I want to caution you on jumping to a conclusion without evidence. And right now we do have, a bit of a bearish, we had a bearish Friday, but let's also keep in mind that last week was a very light, choppy week. Not much going on there. So not many decisions can really be made here. If we look at this price action right in here, or this price action right in here, or this price action right in here, what's the difference? And all of those resolve to the upside. So we could easily see this market continue higher. And let's not forget, unemployment is at record lows. Consumer confidence is at record highs. We just had a massive new tax bill that's certainly going to affect company financing. We have lots and lots of reasons out there that could inspire this market higher. And let's keep in mind, we're getting close to running into a new round of earnings. About mid-January, that really kicks off here. And analysts are forward projecting that 2018 could see earnings growth as good or better as last year, which could certainly drive the market higher. So let's be real careful not to jump to conclusions and try to predict that the market is going to be short here. Now, futures this morning are bullish and have been getting stronger all morning. As you can see here, the Dow is expected to gap up about 60 points this morning, kind of erasing some of that move yesterday. Now, that doesn't necessarily mean that we're just going to rip higher. What it means is we could easily just stay directly in this area of chop. Nothing more than that. Nothing, and there's nothing bad about that either. Just a little bit of resting consolidation. Let's take a look at the SPY. SPY also bearish engulfing on Friday, but let's once again notice that we are really locked in to a range-bound type trading pattern here. And with this gap up this morning, we're holding the support of that low. The Qs are the bigger question, I think, for me, and kind of a more of a concern for me. If we were to notice that this area right here served as a resistance level, let's make sure I get that line nice and straight, set up, served as a resistance level, and we gave up a price support here, selling off a little bit on Friday. If I were to say that the biggest concern I have in the market right now is probably going to be this right here in the Qs, where we're kind of slipping lower here with a lower high. So we'll want to keep an eye on that. Now, if we take a look here, you can see we're getting a nice gap up here this morning on the Qs. So that could be forestalled and prevent that from occurring. And IWM also showing bullish signs this morning, gapping up here slightly after a pretty darn bearish Friday as we saw some selling into the holiday. So a lot of question. If we take a look at the VIX, and here's the thing I would like to suggest. There's reason for caution, but there's no reason, at least yet, to be overly bearish or overly bullish in either way on this market. There's just a reason for concern right now. We're not exactly sure which way this market wants to go. So let's keep all these things in mind. And let's notice that the VIX increased a little bit of fear here on Friday with that selling, but that should ease today. And we're down here near historic lows in the VIX. No real sense of fear in the market just yet. So where do we go from here? Well, let's keep in mind that we have a lot of data coming out this week. If we take a look at the earnings calendar, the economic calendar, you can see today is a light day, mostly bond stuff, and we have a PMI manufacturing at 945. But focus in on the fact that we have FOMC minutes tomorrow. Fairly common for the market to be choppy and remain choppy as we wait for that FOMC. We have some big reports like that ISM, jobless claims, and the petroleum report coming out. But then we have this monster right here, the big guy of the month, the employment situation report on Friday. And it is absolutely not impossible that we could see the market just be soft and choppy as we wait for some of these big key data points. So try not to make or prejudge this market. I think today there's a good reason for caution. It's also a good day to remember that a lot of traders will not be returning to work today. They will have extended their vacation. So it wouldn't be a big surprise to see the market just kind of be a little choppy as we move forward here today. So kind of watch that carefully. Don't jump to a conclusion. On the earnings calendar, I show 5 earnings reports today, and actually that has just there's just been a change. There was a confirmation of an earnings report that came out this morning, I guess. But 4 others that are unconfirmed for after the market close. None of them would be what I would consider market moving reports. So not much going there on the earnings calendar today. So as we look forward, let's keep in mind, all we have to do is take a look at this on a little bit longer time frame. Just go to a 2-day chart and you can see there's really nothing here. Trend is still in place. Everything is still good. There's no breakdown yet. There's no indication really of a break higher. We're just consolidating and resting. And, you know, we've seen that in the past where that can last a significant period of time. So let's be careful not to chase this market. Let's let it do its thing. Let it back and fill as it must do sometimes to rest. And we'll wait and see if there's going to be any good signals in here to trade. Right now, bulls are pushing for a higher print, particularly in the diamonds. The diamonds are pushing up higher, but they're going to be significantly away from a full-on breakout here at the open. So kind of keep an eye on that. I sure wouldn't want to chase into the potential of a light volume day. So be careful with that. Hey everyone, if this is the first time you've seen this information, I put this out every single day as part of my preparation for trading. If you find this useful, please feel free to share this with friends and family, and do me a favor and click on that subscribe button on YouTube and the follow me button on Facebook so you can be notified when I post these things first thing in the morning. I really do appreciate everyone who clicks those thumbs up buttons. That helps me a lot. And also, please feel free to drop me a note. Really nice comments there, and I really want to thank you for everyone who does that. Everyone, take care. Have a fantastic day. I wish you great profits and a great 2018. I will talk to you all very, very soon, first thing tomorrow morning. Take care, everyone.